conversation. We're looking at KPIT Tech. The company reported what looked like a steady set of numbers. However, the issue seems to be with what the company is saying on the second half, the guidance. Even the guidance has been retained at 18 to 22%, but the company seems to be indicating that it could probably be seeing its revenues more at the lower end of that guidance band than the higher end of it. Kishor Patil, co-founder, CEO and MD of KPIT Tech is with us now. Mr. Patil, thanks very much for joining in. So what is the primary concern? Why do you expect the second half to be a little softer? The stock is reacting to that today. It's down 6-7%. Is it the auto space, the slowdown that we're seeing in Europe? Why are you cautious?
I think the first thing we have elaborated is that there are three factors that we want to say. Number one, we have a very strong pipeline. And it is a pipeline across. It is not in. It is in Europe. It is in US. It is in Asia. So the pipeline is there. What we are not very sure is some of that because of delay in certain, I would say, launch of some of these programs. If they get delayed by a quarter, we may lose certain revenues during this year. That was the primary reason we have said that. At the same time, I just want to make it holistic. We have also said that there is a reason that last 2 quarters or 3 quarters, because of the cost savings OEMs were looking at, we have increased our offshoring, and hence our margins have gone up ahead of what we have said in this past. So while we have said that, so it is very interesting. We are one of the few who gave the guidance. We are saying in the guidance, the revenues will be at a little lower end, the profitability at a higher end. That's what basically our commentary is.
Okay, all right. Hi, Mr. Patil. You know, the problem that the street has is, should we be extrapolating this and will we see a softer FY26? Because if we're going to have a weak second half of the year, so I wanted your comment on how FY26 is shaping up. And also on the margin profile, you know, Mr. Patil, over the years, you've done 16, 17, 18, then 19, 20% margins. And because of a whole host of issues, offshoring, utilization, better pricing, various initiatives that you have taken, do you have enough levers to see margins expand, say, in the next 2-3 years as well? Can it improve by 100 basis points, 200 basis points? So comments on both FY26 and margin outlook.
Absolutely. So FY26 typically we come at the end of FY25 because that is what we do. But at the same time, let me say that we have a significant and a strong pipeline. We have very strong conversations, and we see no issues in that. And actually, we have given in detail what will be what are the opportunities and what where the challenges are. So in certain cases, if you look at it, markets, there are some OEMs which are in a very good shape. They have got good results, and there we see growth going forward, etc. In other cases which are under pain, they are looking at a significant transformation, and that's where we are in discussion for a very significant kind of pipeline. The issue is what and when it would start. And we are very always coming up front and saying that this is the environment, but nevertheless, we will be in the guidance, profitability will be at a higher and this will be lower. The pipeline and the closures have been good, and it has been across. It is not in a particular geography, but it is also where we have seen a more, if I have to say, flattish growth during this quarter, like Europe. We have a good pipeline.
Okay. And on margins, in the past,
yes, absolutely.
You have improved by 100 basis points, very, very roughly. Every year, you have improved by 100 basis points.
Absolutely.
In the next 3 years.
And during this year, absolutely, absolutely. And we are very happy about it. And if you look at it, even this year, we are increasing our overall profitability over last year. That is irrespective of 2 things. During this quarter also, there were 2 things. One is we are one of the few companies who are given the full increments across, and we continue to give that. Secondly, we have given the ESOPs, significant ESOPs, and this quarter we had a, last quarter the impact was only for 2 months. This quarter there is an impact of 3rd month. So in spite of that, we have increased the profitability for the quarter. The point we are trying to say is we have enough headroom. and we will be in a position to increase the margins over next couple of years.
So margin should be 21% this year. Mr. Patil, morning, Prashant here.
We are not saying that. We have said that earlier we have given 20.5%. We said it will be a few percentage above that. A percentage means point. It will be between 25.5 to 21 on a higher side. That's what we have said.
And FY26 revenue growth should be 18 to 20%?
We will not comment on that at this point of time. We typically, but what I can tell you that the underlying growth is good. There are three reasons why I'm saying that. First is wherever we have a long-term contract, they hold very well, and we see growth in that.
Yeah.
The second is we have entered into certain adjacencies, and we are seeing some good tractions there. And you see some of these which were not growing earlier, and you can see quarter-on-quarter growth in those kind of a thing. And third, which is not what we are banking on, but will acquire a certain capabilities through acquisitions, which will allow us to accelerate growth further in the new areas.
So there is this QIP, right? For you're raising money, $340 million to. And this is going to be a few acquisitions, not one large one.
Yeah.
So already, targets identified. Should we hear something soon? Could you give us a sense of what this is, what geography?
So typically, we are taking an enabling. It's an enabling one. We are not. It doesn't mean that we are going to raise it tomorrow. It's an enabling, which means it allows us to raise the money in next 12 months. We are currently naturally engaged with multiple such opportunities, direct as well as organic, where we need to make investments for significant growth. And in both these cases, these are active discussions, and we feel reasonably confident that something should happen in 6 to 9 months.
6 to 9 months. Mr. Patil, just leave us with some sense of what areas are you looking at for these potential acquisitions, or as you said, it could be organic or inorganic, but what technologies, what are you exactly looking at?
Give more details, but I can tell you that it will be in adjacencies, which we want to double down on. And that is number one. The second, the most important is on the cost reduction. We want to really double down on cost reduction. That will be certainly important because that is on the top of the mind. And third is certain new technologies which are very important from the compliance and globalization of the OEMs of taking their products. So these are the three areas which we have identified and we will invest in.
All right, Mr. Patil, we'll leave it there, sir. Thank you very much. Good luck and hope to speak with you soon again. Appreciate it, as always, here on CNBC-TV18. We'll take a break. We'll have the management of Godrej Properties join us on their second quarter numbers on the other side. Stay tuned.